Okay, traders, welcome aboard. Today is Thursday, August 25th, and I'm Michael Boutros. Welcome to this live intraday strategy webinar on SB Trade Desk. We just got the release of durable goods orders in the United States, coming out stronger than expected across the board. The only thing that missed was cap goods shipping non-defense XAir comes in at a contraction of 0.4%. We were looking for a snapback. Also cite the downward revision for the previous month's read. But headline figures here for the preliminary read coming out stronger than expected. Durable goods orders non-defense is also seen as a big gauge of business investment. So certainly a 1.6 print there does bode well. Saw a little pop in the dollar, but the key range that we talked about yesterday remains in view. We'll go over the dollar index and all its levels, which were highlighted yesterday on the radar charts. Obviously, we'll touch on euro and pound. And all the dollar crosses for that matter as we head into tomorrow's highly anticipated speech by Janet Yellen at Jackson Hole. Also going to touch base real quick on some of the other radar charts that we covered yesterday. Aussie Kiwi coming into that slope of influence. Again, you're vulnerable if you're holding shorts here, so I wouldn't necessarily want to press anything at this point. We'll touch on gold and crude. Also take a quick peek at sterling Kiwi. That's what's on my list for today. So as always, guys, questions, trade setups you'd like to review or any specific pairs throughout the session, please feel free to throw them on the message board. Eileen, good morning. Good to see you. Happy Thursday to you as well. Adam, good morning. Medad, Graham, Francis, DJ, Scott, Matthew, Trevor. Great to see everyone here in the room this morning. So let's jump right in. Here's what the U.S. dollar looks like. Well, I guess before we move on, just keep in mind that 9:45 later today, we do get market U.S. services PMI numbers and composite PMI numbers. Not likely to be a market mover. And before we jump into any trades today, it's important that everyone understand, again, summer lull is here. You're heading into the final week of August. There's major event risk tomorrow. You have members of the BOE, which we'll be talking at the Jackson Hole Economic Symposium as well. And obviously, everyone's looking to see what Yellen has to say. So that's all to say, guys. Expect the ranges to start contracting. Expect thin liquidity conditions. So again, spreads could blow out. Not our ideal scenario for intraday trading. So just as a disclaimer, I'm not holding anything right now. If we do get an opportunity to get a decent position on euro or pound, I'm still interested. But quarter leverage, if anything, and just keep, for a near-term position trader, make sure we just, scale back over the next 48 hours into the close of the week. And I think you get some good volatility tomorrow. All right, let's jump right in. So heading into the U.S. trade session, here's what the relative performance for the U.S. dollar looks like. You get split performance here. Euro performing higher, 0.2%. Swissy with a fractional advance. Biggest loser on this session is the British pound, and that's still coming into interim support. Well above its bullish invalidation level still, so might get an opportunity to get back in some sterling positions. I do like the sterling crosses as well. So if you guys have any questions on that, we'll touch base on sterling key specifically. A good way to play Kiwi weakness if that's what you're trying to do. We'll take a look at Kiwi dollar. Again, I know one of you guys reached out. I think it was you, Kelly, online. You had done pretty well with a decent trade on the Kiwi on that spike above key resistance again. We'll take a look at that trade later in the session. All right, let's jump right in. Here's what the dollar index looks like right now. So as we noted yesterday, the major key sort of region of, or the range that's in focus heading into tomorrow is right here, the 100-day moving average, which converges on basic trendline resistance off of that swing high, or this is the high for the month. So that converges right there, right around 11,918. And then the key support region, which we rebounded earlier in the week, beautiful Fibonacci confluence of the 618 extension off the high and the 618 retracement off the low. So heading into tomorrow, this is the range of focus, okay? Look, before we move off, I'm going to bring that back again, the Bloomberg terminal. I just want to show you, we've been tracking this, the world interest rate probabilities by way of Fed Fund futures. Here's what Fed Fund futures look like heading into tomorrow. Markets are starting to weigh a little bit more, and you're starting to see this rise a little bit more with regards to expectations for a December hike. Okay, September and November are still sub 50%. So if this changes tomorrow on the back of Yellen's speech, I'll post it on SB Squawk. But as it stands right now, the shift is whether they start to factoring in a higher probability of a September-November hike. Okay? If we do, the key resistance level, again, of this range, if it clears, targets would be the monthly open, which comes in 11,936, and then the upper parallel. And this is still what you would need to essentially clear to get bullish again. So long story short, even if we get a pop on Yellen, I mean, obviously it's going to depend on what she says, guys. And if we see a dramatic shift in expectations, you could see this thing just full on reverse. That said, you'd be looking for resistance on a break higher near the monthly open, near the former lower parallel, and that could offer some nice resistance here on the greenback. Keep in mind the 30-minute chart that we've been following here in the webinars hasn't changed at all since last week. That same near-term descending channel off this month's high, remains in focus. Okay, you're starting to see momentum holding 40 support. Here's your 60 break. Expect to see some upside movement. On a near-term scale, your weekly open comes in 11,915. That would be sort of a near-term validation for the breakout higher. And then you'd look for the monthly open and former lower median line parallel. Now, on a breakdown to the downside, below key support 11,850, which if you guys recall, again, we've been monitoring this region for almost over a month now. If we break below this, there's really nothing on tap until maybe this low here, 11,800, just a figure, but more importantly, this key confluence region here. Okay, 11,786, 783, you got former channel resistance, now support, 764 retracement of the advance off the Brexit low, and the low day close for the year. All converge right here. So the levels are pretty clear. I love it. As far as playing a range type of play breakout for this, heading to the close of the month, keep in mind again, also momentum hasn't been marking divergence necessarily on the daily, although you made a new low here. Did make a slightly lower low, but long story short, you see that 40 starting to hold the support. So expect some range-bound sideways action here for the dollar index heading into tomorrow. Any questions on the greenback? Again, remember, the loonie is not represented here. The Kiwi is not represented here. At its inception, the Dow Jones FXCM dollar index equally weighted Euro, Aussie, Sterling, Yen. So just keep that in mind as we go through the various crosses here today. Okay, let's jump right into the good stuff. Here is where Euro was yesterday. We'll come back to the radar charts from last night. I just want to go in order here, starting with the Euro dollar. So remember when we talked about this on Tuesday's webinar, someone here had asked about Euro right before I closed out the session. And I told you guys, I like where it's at on the near term, but I'm not so hot on the long term. Well, that night I spent like a good hour and a half on these charts, and the daily I'm starting to get a little bit more clarity on. I think I'm starting to get a little bit more of a strong beat on it. Haven't necessarily taken any trades yet. I'm looking for possible long exposure or a long trigger on a move down into this key region. That's 12,000, 112.26, 112.30, the same pivot region we've been watching since the end of last month. Okay, this is 100% extension off the lows, 618 retracement off the Brexit, just the Brexit daily range. You have the 100-day moving average right in there as well, and the lower median line parallel for the formation off that Brexit low. So by all means, this should be a pretty strong region of support. Also will serve as our near-term bullish invalidation level. If we break below this, you're going to shift the focus lower towards the monthly open, that 200-day moving average, and the reversal day close here. So certainly looks clear as far as highlighting the key levels. Top side resistance, still going to look at that 618 off the high for the year. A break there, you're looking for 1400, and that's really the major key resistance, okay? You have trendline support off December low from last year. You have the 1618 extension of the advance off the Brexit low. And a breach above that would also clear the monthly high. You'd basically be looking for the median line here which also converges on the high day close. I don't have that labeled. Let me do that. So the daily chart, absolutely paramount here. Looks very, very clean, and we want to keep this in focus. Your bullish invalidation level is here. It's just below 1226, by the way. You do have a little bit of room, a little bit of wiggle room, excuse me, down into like 1218, 1215, where that 100-day moving average is and the lower parallel is, but broadly looking for an exhaustion low into that region. Here's what we look like. I'll just show you the broader chart first. Here's the 120-minute. You were coming into slope support last night. You could have seen a little bit of a bounce here, but the broader line, you're still looking for that drop into this confluence region. Here's what the 30-minute looks like, and here's what it looks like right now. Okay, so now there's where we were last night. That actually did charge a nice bounce to the upside. Okay, initial resistance 1270, and then we were looking for staying bearish near term below this parallel, and that's exactly what we're riding. Now this is a newly added slope I just kind of tacked on this morning. I was looking at it last night and we had already dipped below it, so I didn't want to stress it. But just as a point of reference, I don't want to stress this slope just yet. You can see that that rally just failed today right around that region. Okay, so your objective is still looking lower for a move towards 1230, 1228, 1218, this region here, looking for an exhaustion low. Interestingly enough, heading into 8:30, 8 o'clock tomorrow morning, that's where the convergence happens with the lower parallel. Yellen speaks tomorrow at 10 o'clock, by the way, at Jackson Hole. I'll be highlighting any of her major comments on SB Squawk as we get through that, but keep that in mind around 10 o'clock tomorrow. So right around here. Interesting point of reference. Can you zoom out on the euro dollar daily or the 30-minute there, Eileen? A 30-minute? Yeah, sure. Here, I'll bring it into get a 2-hour chart. Looks pretty clean on that. And these red lines, guys, they're just parallels. So you just want to, when we're scalping, there are levels at which we want to do something, okay? If we're looking to, well, this is an uptrend, so ideally you'd look for support there. But if you're holding along on a counter trade bounce here or counter trend bounce, that's where you'd look for resistance and vice versa. You don't want to stress them too much. They can offer near-term pivots in price. The broader structure is what you really want to pay attention to, which is why I put these in dashed lines. So the median line, the actual concerted median line off the lower median line parallel, or slope support. These are the ones that you really want to stress. Intraday, though, these sliding parallels can offer some really nice bounce backs. Good, got the pick. Thanks. You're more than welcome. More than welcome. So any questions on euro? Risk is still for a near-term breakdown, looking to stay constructive above 112.20. Topside break of 1350 really looks for the subsequent advance into 1400. Last month's high comes in at, or the monthly high comes in at 1366, but essentially you're looking for that rally towards 1400. All right. So ahead of Yellen, that's what we're looking at here. Now, if the dollar rips and rallies super strong and we see a break the downside here, which is not preferred, but if it does happen, you know, I'm not doing anything. That's a scenario where I'm on the sidelines. I'm not really going to look to chase a decline here just because how far off the highs we already are. So in a scenario where the dollar really rips face, you know, just stand clear here of the euro right now. In that kind of scenario, we'd rather actually play a position in dollar CAD, and I'll show you that in a moment. Okay, so let's move right on from euro dollar to pound dollar, which was also highlighted in the intraday update last night. Here's what the pound dollar updated levels look like, and what I was highlighting here was a major resistance target into 32.88. Pound dollar specifically hasn't really been on the menu for me for a couple of days. I've been playing the pound crosses, as you've seen in the intraday updates, pound yen, pound kiwi, even pound CAD. But pound dollar haven't really been too big of a fan of. just because the dollar index is kind of sitting mid-range after that rebound off key support at 11,850. I didn't really want to do anything. Kind of wanted to see how that pans out. So we didn't even make it up into that stretch. Okay, we failed at the monthly open. I was highlighting that last night, 32.38. Again, that key Fibonacci confluence is at 32.88. So I was actually looking for a stretch into that region for a short position. The high that we made last night, or the high that we made in general here, was just under 32.73 was the high. So I never got an opportunity to get in. I still think it's the pound. It could just rip into this region just to fake everyone out, then move lower. But this is a big region. This is a big region. All this is a sliding parallel for this same slope, extending off the monthly high. This right here, what you see in gray, is the 618 extension of the advance off of the yearly low, multi-decade low, okay? And you had the monthly open just ahead of it. So the long side would be vulnerable at this point, okay? Any way you slice it. Here's what it looked like on the 30-minute chart. So on the 30, what was interesting is within the confines of the advance, slope resistance also caught those highs. Okay, so I was looking for one last dash into here last night. I thought that would have been a beautiful entry for a move lower. You can see that on that upslope. We quickly failed again at the monthly open and pulled off. So let me show you this, the 30-minute chart here. And then where we were last night. There was slope resistance. Looking for one last stab into 32.88. Didn't get it. Saw a little bit of a breakdown. We're now testing this level here. 31.73 is support. 50% retracement. So we're back right here. And again, broadly speaking, guys, you want to get long at uptrend support. My only problem in trying to do it at this point is you have Yellen on tap tomorrow. You have, what's that mate's name from the UK? He'll be speaking tomorrow as well. Shafiq, right, will be speaking at Jackson Hole tomorrow as well. So, I mean, there's a lot of event risk on tap. Ranges have been tightening. I'm still looking higher. Ideally, if you get a drop towards 31.20, would be where I'd want to get a long position on. Okay? And again, that's just a basic slope support. Bring us to an hourly chart. Ultimately looking higher. Bullish invalidation still 30.56. So we would need to break below the weekly open to get this back on the bearish camp here. But looks like to me a clean break of resistance, test of support, continuation higher, little interruption before we move to that final 33.40 level. Why did you not take the short on sterling even though not as high a pullback as you wanted? No triggers, seemed divergence then. You know what? Honestly, Eileen, I just think I missed it. Let's look at the 5-minute trigger. Hold on one sec. Let me get my platform up. You can see here from this line, I didn't draw this morning. This was from last night. I was already looking at divergence, price action making a higher high here. So from this level on that spike, I missed that initial decline. I was looking for this rally one more time to get up into the highs, but again, I just didn't believe it. Just didn't believe the trigger. You actually had one right here, Eileen, on the 30-minute. Right off the lows. I mean, that would have been a pretty decent trigger with a stop against the high. You're looking for, what, 30 pips right now? Eileen says, hi, I understand, especially about not trusting the trigger. I mean, yeah, this was just a missed opportunity. I can't make any excuses. Let's see what the pound looked like last night. Because I feel like I was just getting so frustrated. Yeah, you had plenty of triggers. Here's a 5-minute. Just even on this shallow trigger right here. Even on that delayed trigger. 29.50. Stop against 29.75. Looking for 32 pips. That works for me. It was a great trade. I just missed it. Wasn't tracking the market all day yesterday. You guys know I was out, so I just kind of was getting in the groove of things. But that was a great trade. Would have been. So at this point, you're setting some divergence on the 5-minute here as you made a new low into support. Look for a little bit of a rebound, but again, I wouldn't be necessarily ready to get back on the long side per se. Dollar is pretty strong today. You remain at risk in your term, all below that monthly open, which comes in just below the 618, 32.37, 32.46. Again, if we drop into 31.20, same type of game plan that we have for the euro. Look for that pullback to get back on the long side. So are you thinking it will be going higher back to 32.50? Yeah, I'm pretty constructive on this. Oh, before going back down, before you're going back down, Ruth, you mean down to here? Yes, it could rebound back into the monthly open, but I'm not necessarily looking to play that into tomorrow's event risk. Ruth, does that make sense? I'd rather play the breakdown here and then get long. And then Ruth says, oh, okay, ignore that question you just saying. Right on. Sorry. I'm not reading your messages fast enough. Adam says, can't catch them all. Exactly, Adam. But you know what? As odd as it seems, sometimes it's still satisfying to see the trade pan out. Even if you're not in it, obviously we're here to make money. I'm not here to look at charts and just critique them. But it means that we're on the right track, right? It means that we have a good grasp on things and should continue to stick to the game plan here. Any questions on pound? Also, Ruth, just to answer your question, also, if it does rally, I don't have anything to play with per se here, but if it does rally here and you get a decent short trigger again, it might be a decent position to get back on the downside just for a near-term scalp towards slope support. But as it stands right now, I'm going to sit tight here into the U.S. Open. All right, so that is British pound. Next up on tap, I do want to go into some of the radar charts that we covered yesterday. Obviously, we went over the U.S. dollar. Next up on tap from last night's radar chart update was Aussie Kiwi. Big, big, big region. Absolutely paramount here. So the slope of influence, we've been tracking this one for years now. Literally, we're testing it as major key support. And again, it's on the radar chart because it might not be something you want to necessarily mess with on the near term, but definitely something you want to take note of, especially heading into event risk like tomorrow, where you could see a big discrepancy between how the Kiwi reacts and how the Aussie reacts. That divergence in price action could really chart some volatility here. So I think this marks a 9-day decline. The last time we saw that, guys, it's only happened once between now and the year 2000. So we made a 6, I don't know why this is showing 6 days here, but it is an 8-day decline. Last time we saw this many consecutive declines was back here, okay? That did catch a near-term low before rebounding to test the high one more time, and then the obviously onslaught of the major decline for 2014 and into the 2015 lows. Prior to that, the only time that was greater, and again, I'm not sure why the indicator here on FXCM's platform is wrong, guys. This is way more than 6 days. Was back here. That's what I was looking at last night. Was back here. And what I just wanted to note is that that just saw a brief interruption within the downtrend. Didn't cause the reversal right here. Okay? But it was a brief interruption of the broader downtrend. You saw, let's see how many days of rebound. Saw basically like 3 days of sideways action to higher before continuation lower. So the exhaustion trade, while it looks on its face just because of how many, just because of basically how many days that we've continued to move lower consecutively, would cause you to think, oh, maybe I want to fade this move. I just wanted to caution you on those last couple of instances. One of them caught a low, the other one just saw a quick interruption before moving lower. So either way, yeah, we could see a rebound here. It could materialize into something, but it doesn't necessarily mean this exhaustion trade's way on the extreme side yet. So what does that mean for price action moving forward? Here's what it looks like on the daily chart. You guys have all seen this before. All I did last night, this is the slope off that 2014 January low, which has continued to define so many turns. All I did was take that same slope and extend it off the yearly low. Okay, and if you do that, it highlights this key region, 103.50. Now, as it stands, we're at support right now. Here's the 100% extension. So if this is just a correction, 2 equal legs off the high, puts you at support. That same slope extending off the 2015 low, which caught the 2015 lows. We pierced through it last month. That's at that region. And basically right now, immediate resistance is the 50 line of this slope. You can see we're testing that right now. So that's all to say, this is going to be on the radar chart for a couple more days. If we get a drop into 103.53 on a knee-jerk reaction, might be a decent attempt or a shot at some sort of near-term fade. On a break above the median line, you have clear-cut targets into that 618 at 104.78 and then the upper parallel. Okay, but it's not out of the woods yet. This is the range basically that you're working with the Aussie key. Any questions on the broader scope here? Don't necessarily have a trade set up ready for it, but something to keep on the radar for sure. Remember that on that dip into major lows, okay, into that parallel support, you did see some really strong bullish divergence. The rally came right into that slope of influence. We pulled off, tested it again, now testing slope support. On the near term, here's what that 100%, actually if you take a retracement off the low here, the 786 comes in at 104.10. So 104.10 into the 104 handle. You can see that we've been building divergence into that low as well. So you might be on the set here for a near-term recovery just towards basic trendline resistance off the monthly high. All right, so an interesting setup I'll be tracking here. I don't know if I necessarily want to mess with this. It would be a decent trade to stay relatively out of the dollar's way heading to tomorrow. Just want to see what this looks like. Okay, let me just readjust these levels for you real quick. Ew, look at that. Wow. All right. 38.2 comes in right in line with the monthly open. I'm going to call that near-term bearish invalidation. Heading into tomorrow night, basically. And a break lower, you're basically looking for a drop into 103.50. But I don't know if I'm ready to operate on this yet. Just near term, watch for either a turn and a break higher. You'd need to clear again that 104.87 monthly open region. Or if we break lower, I'd be looking for possible support there down near 103.50. Any questions on Aussie Key? Flat for now. Look for a resolution or a more material bounce off this key support. Next up on tap from last night's radar chart was gold, and it finally made the break. Oh, man. So the bearish gold call sub 1355 for the last 3 weeks. Yeah, finally starts to look decent here. It looks like this median line formation that we added a few weeks ago could actually still be in play. You saw that yesterday's close came just above median line support. We're looking to break that today, near term, and these are the levels you need to know heading into tomorrow, guys. 1330 is resistance. It's the reversal day close from last month. Initial monthly opening range low for this month. Former slope, all converge right there. Break lower, looking for the May high, comes in at 1303, the 100-day moving average, and this key region of support. And this is a region, if we get down to, I think it would be a great opportunity to possibly look for some exhaustion on the short side, i.e. long entries. Okay, this is a basic 50% retracement from the advance off the lows they made here in May. You also have basic trendline support off last year's low, the 50 line for the current operative slope, and the 100-day moving average, like I said, comes in just above that at 1292. So would love to get long from down there. Risk remains lower. We'll go ahead and scratch this at this point, 1380, but the risk remains lower. Broader bearish invalidation still remains with the monthly open here at 1350. Any questions on gold? We touched on this earlier in the week, but basically, again, if you head into tomorrow's release and you see Yellen start coming out a little bit more hawkish, which is what for some reason seems to be the expectation, you know, you could see gold really take a hit even more so. Not only on the account of dollar strength, but just on the account of the you know, the hunt for yield, essentially, that investors are looking for. If there's a scenario where she comes out much more dovish than expected, even in that type of scenario, I would only be looking for that move higher to get towards the upper parallel of this formation. So keep that in mind. Also look for what the broader market reaction is, guys. If we looked at the equity markets over the last couple of days, it's been very interesting. You've seen the onset of a little bit of a pullback as people start to really prep for this Friday. Give me one sec. Sorry about that. But just looking over equity markets for the week, you can see we're pretty flat. We've been moving flat. Yesterday we were slightly lower. Europe today is lower across the board. For the week we're lower across most of the European major indices. Asia, same thing, pretty you know, holding pattern. Everyone's looking to see how this Jackson Hole Summit actually pans out. So if risk turns over abruptly, this could find some support as well. So there's a couple of different factors here playing for the gold trade, but broadly looking lower still. Remember, the major premise is still trading against that long-standing 2011. Oops, sorry about that, guys. Gold. The premise is still trading against this long-standing basic trendline resistance off the all-time record highs. Right? So it wouldn't be too far out to get that pullback into that region and then find a little bit more of a sharper support rally. Questions on gold? All right. Next up on tap from the radar charts, and the final chart from last night was crude oil. Big levels here on crude as well. We'll go over dollar CAD after this in just a moment, but we didn't get that final spread into 48.97. Actually, I'm sorry, excuse me, that we did get the final spread into 48.97 here on an outside day reversal. Now, you have this formation, which we've been following for years now. This is off that swing high that you made in 2015. Continued to catch the high that we made back in June, caught the low on a sliding parallel here earlier this month, and here's the rally turning just ahead of the upper parallel. The major key support that you need to keep in focus here for crude is right here, 45.22 into 45.79, okay? It's a basic 38.2. You have the swing lows and the actual concerted low for June trade. And you also have the 100-day moving average, which has been a very clear-cut pivot in price, coming right into that region as well. So looking lower sub 40, essentially 49, looking for a near-term support break sub 45.22. You'd be looking for targets at 44 and basically 43. Obviously dependent on time, that convergence comes in mid-September. So the risk remains lower. Look for near-term and immediate resistance if you're scalping this on the high day close here for the month, basically 47.31. Any questions on crude? Now, obviously, everyone who's looking on crude, the natural assumption is to look at dollar CAD. Here's what the loonie looks like. Dollar CAD. Here we go. So, it's been ugly. If you guys remember the update from previous, if we go to the 23rd, here's what we're looking at with dollar CAD. Levels haven't changed on the 30-minute chart, but it just lost all sorts of momentum as we came back into this resistance. And this is the resistance that we highlighted. Let me show you the 5-minute chart, I guess. Well, here's the daily, okay? We filled the gap literally almost to the pip from Sunday, moved higher, and we're just stuck below this confluence. You have the 50 line for this larger formation, which again, we don't want to put too much emphasis on just yet, although the median line caught the lows here. But more importantly, you also have just former lower median line parallel and that 100-day moving average. Again, all right there. That's basically what this thing is chopping up against on the 30-minute chart here. So here's what the 30 looks like. And again, let me bring it into a 2-hour chart for now. It looks like we're trying to break this formation. I don't want to stress it, but you can see there's nothing here for us right now, guys. It's either the pop above 29.50 to get the pullback in long, targeting 30, 30.10, the monthly open, more critical resistance up here, okay? Or on a short trigger and a break back below 28.60, which was our bullish invalidation level earlier in the week, that would put me back on a short type of bias. That would necessitate not only a break below the monthly open, but also the monthly opening, not only of the weekly open, but of the weekly opening range low. So both of those breaks would certainly put me back on course for the short side. Until that happens, guys, flat, not really looking to do anything on dollar CAD. But heading into tomorrow, these could be some key levels that you want to keep in play. Keep in mind, heading into tomorrow, you also do get some, actually, I'm sorry, that's next week. GDP data from Canada is on the 31st. So just look for dollar price action to really drive this. Again, sometimes with these releases, just better stay on the sidelines. I don't want to press a trade or force a trade that's not there for me yet. Questions on Loonie? Righto. Next on tap, Aussie dollar. Also from that same update, here's what Aussie looked like a couple of nights ago, back on the 23rd. Okay, this formation has been so fruitful, it's ridiculous. Now, I haven't taken anything since earlier in the week, if you guys recall, on the rallying to 76.51. Here's what it looks like. Getting a little messy, but for some reason, my slope is not here anymore. Remember if we added this, guys? Again, continue to offer a little bit more of a reference hold on the highs there. But here's the weekly open. There's the 50% retracement. You know what your range is, what levels basically you've got to clear here. Ideally, again, we're still looking at the same downside levels around 75.50, 75.48. You got a lot to look there as key support. It would be a great region. I would be very interested in getting long. That doesn't come into play until next week from a slope standpoint. But levels unchanged. Here's what we're looking at. We're coming off uptrend resistance. Here's your basic trend line support off the lows from May. There's that 50 line. There's the 618 retracement. Everything's at 75.50 every time you look at it. They all stack up at 75.50. So definitely an area of which if we get into, to be interested in some long exposure here for Aussie dollar. I do want to check something out. Bear with me one moment. Okay, 75, 71. Another level I just keep in mind. The long and short of it is, guys, we're not looking, or I'm not personally looking to play the short side just yet. I'd rather get a dip into this level and buy. So kind of makes sense with what we're looking at with the dollar index. We talked about that earlier in the session, right? How you could see the dollar index making a stretch into resistance tomorrow on some crazy commentary or some nonsense, and then it starts to come off. Yeah, that would be the play I'd be looking for. You know, actually with the euro, dip lower than go long, sterling, Aussie, similar game plan for most of these dollar crosses. Any questions on Aussie dollar? Remember, on its face, all it's done is set a weekly opening range. Monday, Tuesday high. We've sat in it ever since. All right, so that is Aussie dollar. Last but not least, I do want to touch base real quick on sterling key. This is a trade that we presented earlier, also earlier in the week. Might have been this same update. Oh, it was. Right here. Boom. This ridiculous slope that we just tagged on earlier last week, remember, really, really premature, has continued just to play out like no one's business. So that high that we caught earlier in the week, we saw the pullback into support that held, a little bit of a downside stretch through it. But remember, bullish invalidation is 80.14. That remains unchanged. As long as we stay above that, you want to be looking to buy pullbacks here in sterling key. My favorite upside target at this point is still going to be up into 82.12. I would be mindful of this 618. Don't have too much conviction on this low. I hate using these stretch lows. That highlights 81.58. More importantly, is going to be that 38.2 of the basic retracement, which coincides right on the median line. This one's been, I mean, look at the inflections we've gotten off this slope, guys. Support, resistance, support, support, resistance, resistance, fib confluence. Okay, and that is into tomorrow's close for U.S. trade. So look for that key region of resistance. Oh, excuse me, this is actually in play for tonight, into tomorrow morning. All right. Again, you know, on some of these breakout trades for the ranges, I'm not sure you'll get it before tomorrow. If those three, Aussie, Euro, Sterling, which one would you watch the closest tomorrow, do you think? Good question. Out of the three, I would be watching Aussie just because I've gotten the most play out of that for the last 3 days, or since last week. You guys remember, I've been following the Aussie very, very closely. That's been the one I've favored the most, and it seems to be the play of the week also, Eileen, based on the ranges that we're seeing. So kind of leaning a little bit more towards the Aussie. The only thing I would say is that the Euro, in my humble opinion, still has the cleanest near-term price action. Especially if this sort of slope holds and you get the turn lower into U.S. trade, I think this has one of the cleanest price action just based on slope on where we've been over the last couple of weeks. So the pound would be probably my least out of the three. Eileen, if I want to play the pound, like I said, I'd rather play pound Kiwi, pound yen. Let me show you those levels in a moment as well. Further highlights that. But let me show you the pound levels, or pound yen levels. This is another one. Look, if the yen really is going to make one crazy stretch lower tomorrow and then rip everyone's face off, I think this is another pair that I would like to play, as opposed to playing dollar yen per se. So basic channel support off the monthly low. Looks to keep this thing still in play while below the swing low that we made essentially like right here yesterday, around 32. It's also really, really close to, let me actually mark this up for you. Here's the weekly opening range high, the initial weekly opening range high. I'll probably put this right here. But the major key resistance that we've been looking at ever since the breakout earlier this week is up here. and that's 34.40, 34.50. You have a 1618 extension off the low with 38.2 retracement off the high, channel resistance, all lined up right here. Decent pivot in price as well. So don't forget what the broader picture for the pound yen looks like. This is a 2011 trendline support. Little rounded bottom type action here. And the upside potential here is really, really stirring, especially if this is a legit breakout. You even got to trigger a 3-point trigger in momentum. We haven't gotten crazy follow through in price yet, but there's a major event risk on tap. So let's see what the markets do heading into this Jackson Hole event. Any questions on pound yen? Okay. All right, guys. Well, if there are no other questions, I'm going to go ahead and wrap it up here for the week. We'll be back on board. Remember, Monday is our free public webinar on daily FX, and then we'll come back here on Tuesday, Wednesday, and Thursday for the intraday strategy webinars. We're back to full schedule next week. Look, heading into this thing, I really, it's going to be based on price action if we get anything major, but it's likely going to be a quiet session. Don't expect much. And ahead of that release, also don't be highly levered in any dollar cross, because with these things you never know. Like I said, Jackson Hole everyone uses the precedent of what Bernanke did there with the introduction of QE. We're not going to get anything like that, right? We're not expecting any other measures, but if there's a shadow of doubt cast on whether they actually would be able to hike this year, look for the dollar ticket beating. If they come out and they're a little bit more, well, let's wait and see, we hear the same exact nonsense we've been getting, or the same exact, oh, it's data dependent, yada, 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 you might not see anything at all. And that's the variable nature of these releases and why it's so hard to trade on an intraday basis. That being said, let price action be your guide and you'll be fine heading into the end of the week. Appreciate the tweets you send out, pal. Have a successful day. Hey, Kelly, same to you, man. Nice play. Oh, by the way, Kiwi, let me just go over that real quick. I'm going to write that down here. It's the only dollar cross we didn't cover. Here's what Kiwi looks like on the, look, I don't really want to play with this. Yesterday, we finally got, you reminded me, Kelly, yeah, thank you. You finally got yesterday a close above that godforsaken 72.95, 72.93 region. Remember the March 2015 low day close, the high day close from last month. Every attempt we made, we couldn't close above. Yesterday, we actually did, and now we're testing it as support. I don't want to do anything with this. I'll tell you the game plans I'd be interested in. If this thing rallies into 73.90 or just into that trendline resistance there, might be a decent area for some near-term short scalps. That would be a breakout, so inevitably you'd be looking to buy it, looking for a target up here. Or if you see a breakdown, I'd be looking more for kind of a move towards the monthly open, former trendline resistance, and then that takes you as low as like 72. That's if you put a gun to my head and tell me, Mike, you have to trade Kiwi dollar right now. I'd rather trade this if a spike into the high on a sterling key long. So if this spikes into that region of resistance, I'd rather take sterling key on a move lower near term to get back on the long side, targeting that 81.58, 82, and so forth. All right, so I'm still not a fan of Kiwi. And again, I hate bringing up trades where I don't really have conviction for you guys, but I know you guys are watching it. So, that's what I would say with sterling, with the Kiwi dollar, rather. You're really messing with some pretty ugly near-term price action. As far as dollar yen, just as to cover all the bases here, as it were, here's what dollar yen looks like. Everyone, and this is something I just want to talk to you. I sit next to David Song on Daily FX, and I hear the bank research all day long as he does DOD, and all the bank research I've seen, and everyone and their mother is getting long, and that's a concern. That's never a good thing. SSI is obviously always, it's like a perma long here on dollar yen, but one thing to keep in mind is everyone seems to be putting their stops, all these banks at 99, 98, 90. You know what I mean? Um, and as you always hear Jamie says, well, Jamie say? What's the pain trade? The pain trade would be to jackknife this thing just sub 99. Stop out all those big banks, stop out all the strong hands, maybe even see a test of the yearly low, then rip face higher. I don't know. But again, if you put a gun to my head, I'm not going to be looking to trade dollar yen. That would be sort of my game plan. Look for this thing just to wash out everyone lower before it turns higher. Dollar yen does tend to be pretty sensitive to broader base movements in the dollar, specifically to these event risk type of trades. So it's something to watch tomorrow. But again, on a yen move, I'd rather play it through pound yen. So just some food for thought there heading into tomorrow. All right. All right, guys. Thanks for your attendance. Again, I'll see you next week. Best of luck trading tomorrow, and we will keep you updated on SB Squawk. Cheers.